Good morning, everyone. Welcome to Prebell with William Model India. My name is Rajshekar Kongari, Equity Research Analyst, part of Market Smith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It is very important to understand Nifty's price volume action to gauge the market, how it is present at the current moment, and also have a view on the market going forward. Recently, Nifty has been in a clearly downward trajectory. The momentum has always been on the negative side after making a new all-time high in the month of September last year. It has been on the downward trajectory. In between, it has reclaimed its 200 DMA, but that was not successful. Currently, it is trading below 250 DMS, which indicates bearishness in the market. Coming to the O'Neill's methodology, coming to the market methodology according to O'Neill's perspective, we are in a rally attempt recently, day two of rally attempt, sorry. And if the Nifty closes below this low, that is 23,000, the today's session as well, we will change the market status to rally attempt. From there, we will be looking out for a follow-through session before changing the market status to confirmed uptrend. And coming to the model portfolio, we have not stopped adding stocks to portfolio. And regarding the existing stocks, we are closely monitoring them. If there is any weakness in those stocks, we are exiting at the market price. Coming to the key news section, result season is continuing, and we have seen stocks like Dr. Reddy's, Indus Towers, United Spirits coming up with the results yesterday. If you look at the Dr. Reddy's results, revenue for the quarter has increased 16% year-on-year basis to 8,300 crores of rupees. Profit on the other side was up 2.5% to 1,400 crores. And EBITDA margin has seen a contraction of 180 basis points to 27.5%. So the growth was there on the revenue front, but that was not reflected on the profits. So there was a margin contraction as well in the Dr. Reddy's results. Indus Towers, the results have been looking good, especially on the bottom line front. If you look at the revenue was up only 5% to 7,500 crores of rupees, but the profit has seen a sharp increase of 60% to 4,000 crores of rupees. The EBITDA margin has also seen a sharp expansion of margin has expanded to 92.7% from 50.3% a year ago. And the company is also foraying into EV charging infrastructure sector, and the company has come up with a pilot project of charging stations in Gurugram and Bengaluru as well. United Spirits, the revenue was up 14% to 3,400 crores of rupees, but the profit has seen a dip of 4.3% to 335 crores of rupees. But surprisingly, the beta margin has seen a good expansion of 30 basis points to 16.5%. Adani Greens, the revenue was up 2.3% to 2,300 crores of rupees. The profit has seen a good growth of 85% to 474 crores of rupees. In the today's session, we are looking at the companies such as Interglobe Aviation, that is Indigo, Godrej Consumer Products, DLF, AU Small Finance Bank, JSW Steel, Hindustan Petroleum, and other companies, small and mid-cap companies will be announcing their results today. So if you have any of these stocks in the portfolio, please be watchful. There might be some volatile action due to the results announcement. For the global market update, US market closed in the positive territory. Nasdaq had closed with a minimum gain of 0.2%, whereas S&P was up more than 0.5%, and Dow Jones gained the most in the US market with a gain of 0.9%. Asian markets are also trading in the positive territory as we speak. Shanghai, Kospi, Nikkei, all three major indices are trading with a gain of more than 0.5 to 0.6, 0.7% as we speak. So definitely the global cues are on the positive side. Let's look into GIFT Nifty index, what it is suggesting for the Indian markets. Yesterday, Nifty closed at 23,200 levels, and Gift Nifty is trading around 23,300 levels. So 100-point higher opening is expected from the Gift Nifty. But 100 point is not a major gap up, or you could say it's not a major gap up session. So that's why we call it a muted opening in the today's session, according to Gift Nifty. But going by the global cues, if those global cues stay strong enough, we'll definitely might see Nifty closing in the positive territory as well. For the chart of the day, we picked Tech Mahindra. As the market is in a downtrend, we are not advising for any fresh positions, but just for the uh, analyzing perspective, we have taken Tech Mahindra, which is looking very good in the current market juncture. Couple of pointers. It is a very good base formation has been forming recently. It is a stage 4 consolidation base, slightly on the higher side, stage count. And recently it is reclaiming its 50 DMA as well. 50 DMA has acted as resistance, and that needs to be reclaimed. And pivot has also to be retaken by the stock to take a fresh entry. Ratings are looking very good. EPS is at 80, good fundamental rating. Price strength and ABID rating has also been improving. Price strength recently has hit a blue dot formation as well, so indicating strength from the technical perspective. Number of funds section has also been a very good improvement over the last 4 quarters for the company. Overall, the company is looking very good on the tech and fundamental perspective and can slim perspective as well. The only concern is it's a late stage base, and given the market structure, we're not taking or advising fresh entries. That is the only concern. Otherwise, it's a very good stock to consider or keep kept on the radar going forward. Thank you for joining today's pre-bell. Have a good trading session.